The broadcast is now starting. All attendees are in listen-only mode.
Shut my screen. Okay. Good afternoon, everyone. Today is March 14th, 2019. It's about 12:45 Chicago time. I thought I'd open the room up a little early today because before I present, I need to talk about disclaimers. Okay, so I do have to present those first before I can go into details about markets and stuff like that. Okay, so that's why, and it's slow. So I thought, this is a great opportunity. Just open up the room and knock that out. The game plan this afternoon, go over the trade setup. Okay, we're going to go over this chart. I'm going to knock out the basic rules. This is the traditional slingshot setup that Michael will go over in the training room. Okay, in the training room, he's in there for 2 hours from 8:30 to 10:30 Chicago time. Okay. Things are whizzing. Sometimes they're fast, sometimes they're slow. He's in and out of trades, managing some stuff. So it's a little bit high speed in there sometimes. So we got a lot of hand raises that said, you know what? Can someone slow this down and, talk us through it? So I volunteered to say, you know what? On Thursdays for 1 hour, I'll go over the setup. I'll break it down for everybody. And then what we'll do is we'll go inside a live environment, look for those setups, and actually enter trades inside the DOM. That's this tower here where we buy and sell. So I'm going to jump in there. I'll buy, I'll sell, and I'll manage the trades, and then I'll exit it from start to finish. Okay. Now this is live. This is not recorded for the moment. My phones are buzzing, so I'm going to hit the mute button real quick. Okay, so that's the game plan. So I'll go over the trade setup like I said, and then we'll get into a live market environment, and we'll go over the trade setups. We'll look for some setups, and I'll get inside the DOM and I'll do some buying and selling and walk you through the process. Okay, we'll review the trade if we find something. Okay. Throughout the next hour, I'm going to make some observations, some typical traps that people kind of fall into. Okay, you're going to hear me talk about trend lines and trending markets, and some things that people, like I said, they kind of get mixed up or fall into that trap where, if they are spinning the wheels or losing, or they're not getting that edge. Maybe my voice, maybe the explanation that the way I come across can kind of tip the scales in your favor. All right. So if you are brand new, this is going to be a great syllabus for you to lean on as far as an eyes wide open approach inside the trial and what to expect. Okay. If you are a CFRN member, this is going to be some additional screen time for you. Get a chance to ask questions, and you'll get to learn some of the personalities of the markets that we're trading. Okay. If you're still on paper trade mode, okay, that's fine. Okay. We'll hopefully some of these Thursday afternoon bits will give you some confidence to ultimately get you to push the button. And again, as the 24/20 plan suggests, you don't hit anything live until you're consistent and until you're comfortable inside the simulator. Okay, and we encourage that. All right, so that's a scoop. So the first order of business is the disclaimer. And again, I don't like to just throw them up there and take a look and drop them underneath the screen. I will talk about them because I've been doing this for almost 25 years, and I've really seen the good, the bad, and the ugly when it comes to trading. So it's something to talk about. And the disclaimer that I have highlighted basically is kind of a warning flag or a label for basically the guys that are really brand new. Okay, it's meant to scare you off a little bit because and the guys are getting into our space futures. This is a leverage business, okay? And so what it says is, look, you can lose everything and some in your trading account if you don't have a trading plan, if you're not using stop losses, if you're not looking over your trading account, the markets, if you just kind of turn your back to everything. If you don't do do those basic things, this disclaimer is going to hit you right smack dab in the face. Okay, I have seen it. It also says that any funds that you put into the trading account should be risk capital. It should be funds that you can afford to lose, doesn't change your lifestyle. Okay? The good thing about going down the CFRN path is this, and as I said, there's a few variables where, if you don't do some of the basic stuff, this disclaimer is going to hit you right smack dab in the face. Okay? If you go down the CFRN path, okay, there are a set of rules, right? We're going to go over the rules in a few minutes. So you have to really be engaged in the market, right? You have to be in front of the screen. So you can't just turn your back to it. As it says outlined here, every trade has an 8-tick stop attached to it. So you're going to be using stop losses, okay? You're going to be using aggressive risk management. And in the end, okay, and aggressive risk management is basically this. You get into a market and your stop is automatically placed, okay? You have some defined risk. As the market moves in your favor, you're going to move the stop to break even, and then you're going to trail the stop, trail the stop, trail the stop, until at some point you just get rid of the trade and exit. Okay? So it's rules-based, right? So you really have to be engaged in what's going on in the marketplace. Okay? So with all that being said, the disclaimer is a warning flag, but you're going to be preparing yourself to do all the right things when you go down the CFRN path. Okay? In the end, however, okay, if you are doing all the right things and you are placing stop losses and you're engaged in the market and you're following the rules and you're doing everything the way you were taught, if there is a crazy news item that comes out, yes, the market could jump, and yes, the market could jump through your stop. That means you're still in the marketplace and you have unlimited risk at that point. The good thing is, okay, because you're in front of the screens and engaged in what's going on and you haven't turned your back away from the market, if that does happen, and I've seen it maybe happen once or twice over my many years, at least you're in front of the DOM. That's the tower that I have highlighted here, okay? We buy in the green. If the market goes up, we make money, and we'll left click in the red, and we make money if the market goes down. But if all fails, the market does jump over your stop, we can hit this exit at market and cancel button. It's a hotkey. It'll get you out of the market. It'll cancel all your outstanding orders in this particular market. And then you can take a deep breath and say, all right, what the heck just happened? Okay. So again, the disclaimer is out there. We talk about it. Okay. It's meant to scare you. It's a warning flag. You should know about it. Okay. And that's why we're talking about it. Okay. And you should know all the little things that could ultimately happen to you. Okay. That's kind of the black swan thing where, that is the worst case scenario. Okay. Where you're doing all the right stuff. You have a stop in place, and holy smokes, a news item comes out and, you're stuck in the market and you're trying to get out. Yep. There'll be panic city. You'll be freaking out. You'll be calling me. But, that's the risk we're taking, and that's what this disclaimer talks about. All right, next thing is my relationship with CFRN. Okay, so 2 entities, CFRN, as is outlined here. It's their tools, it's their indicators, it's their third-party app. It's all their stuff. It's built inside DtPro. DtPro is the trading platform that you're looking at right now. Okay, I support the platform, the brokerage, the execution part of it. So ultimately, if you go down the CFRN path, you say, hey, I'm in, I'm signing up for it, and I want to use DtPro. If you get to that point, I'm going to help you download the platform, get the indicators applied. Down the road, you'll open up a trading account. All that stuff, that's kind of my section. Okay, I'll do all that for you. Okay, when it comes to hey, I'm ready to sign up. Any payment plans and stuff like that that you have between you, that's between you and CFRN. Okay, anything in their members area like the videos, the workshops, Logic 247, the concierge alerts, daily doubles, the Thursday night workshops, all that stuff. If you're having issues getting into the members area, you would just reach out to them. They actually have a valuable asset now in Val. Valerie is in there. She's providing customer support. So I know a lot of people are getting their emails answered and addressed. You know, any of the mentoring, because you get one-on-one mentoring with Dwayne or Mike, you know, you'll reach out to them directly. Okay, so there is a line between Bert at Daniels Trading and Mike and Dwayne from CFRN. There's no in between. There's no commingling. There is a fine line in between. We have to talk about it because, you know, we are registered, and, you know, we have to distinguish or, you know, let you know what the relationship is. Okay, being very transparent about, you know, what's going on. Okay, one of the big questions I always get is, hey, you know, is CFRN participating in any of the commissions that are generated if I go through Daniels Trading? And the answer is no. They never asked, you know, so that's a plus for them. Okay, and they can't because they aren't registered. So, but again, they never asked, and, you know, that's the kind of stuff you want to hear if you're, you know, pursuing education and someone you can trust and have confidence in. Okay, so that's it. Those are the disclaimers we have to talk about. Hopefully we didn't scare you all away, but, you know, that's the stuff we like to be very transparent about. Okay, what's next? Trade setup. Okay, the nuts and bolts. If you're brand new, like I said, this is your syllabus. Okay, so I'm going to break it down. These are the setups you're going to see inside the training room. So hopefully you'll hear some of the buzzwords and things that I talk about, and you can associate or, you know, grab that stuff from Michael when he's talking about it. And so then you have a more eyes wide open approach, and you know, maybe that this will answer any questions you have, or, you know, it might, you know, kickstart a question or what have you. Okay, so the first thing is the time frame. Okay, so we are on a 4-tick range chart. All right, so the question is, how do we get there, right? If you have DtPro open, okay, chances are most people are on like a 5-minute, hourly, or 30-minute chart. Okay, top left-hand corner of the chart, you'll see it right here. That's the time frame. If you just go ahead and look at the drop-down box, left click. Okay, go down to custom and select range bar. Just make that 1 look like a 4. I apologize. I wanted to make sure that wasn't the school. Make that 1 look like a 4, and you're on the correct time frame. In fact, I'll kick it over to the S&P 500, and we're looking at the ES in June on a 4-tick range. Okay, that's what your chart should look like right now. One of the first traps that people fall into, they go down the custom, but they end up selecting tick bar. They end up changing the 2 to a 4, and it looks something goofy like this. If you're staring at a screen like this, I'm sorry you fell into the first trap. Okay, drop down box, custom, range bar. Okay, not tick bar, range bar. 1 looks like a 4, hit OK. The tip is right here. Okay, that R in parentheses will let you know, hey, you're on the correct time frame. On occasion, okay, we might go to an 8-tick range. All right. Some of the markets that are really moving fast, okay, like the NASDAQ and the YM right now, or the mini Russell, you might slow it down and you might consider the 8-tick range chart. Okay, it'll slow it down. Okay, if there's nothing to talk about this afternoon, I'll go into the YM or the NASDAQ and we'll attempt to do something on the 8-tick range. Okay, we'll try that. But for right now, Michael's on the 4-tick range inside the training room, so that's where you should be. Okay, we're on the 4-tick range. All right, next order of business, we're going to work on the top portion of the chart. Okay, we're going to work up here. So let's start with step number 1. Okay, so here's some buzzwords. That's red and blue line here. That's referred to as the MA1. Okay, the green line is the BBC. That's short for bullish and bearish cross, which is step number 1. So the combination of the two, okay, sets step 1 in motion, okay, which is this. If the MA1 crosses the BBC and the MA1 is red, that is a bearish cross, or step number 1. If the MA1 crosses the BBC and the MA1 is blue, that is a bullish cross. Again, step number 1. The one that's highlighted here, okay, is a bearish cross. Why is that? Because the MA1 is red. Okay, so from this point on, I want you to be also thinking about color, because when we could put all the same color in if we get all the same colors stacked up in one direction, that stacks the probability up on the trades. That'll be your highest probability setup. Okay, so ideally we're looking for everything to be the same color. So if we're looking for a bearish setup, we want everything to be red. If we're looking for a bullish setup, we want everything to be blue. Okay, if you want to stack it all the probabilities in your favor, that's what you're looking for. Okay, so again, this first highlighted arrow here, that's a bearish cross. MA1 is red. Okay, so now we're looking for a shorting opportunity. Okay, because the MA1 is red. We're looking to get short. So notice I didn't say, hey, get short here, get long here, get short here. We're looking for an opportunity to get short, because it's going to lead us into step number 2, which is this. After the cross, and this is a bearish cross, the normal thing for the market to do is to gravitate toward the BBC, as it does here. Okay? What we're looking for in step number 2 is that we're looking for the market to gravitate and touch the BBC, or the green line. Okay, that kind of activates it. Okay, but not only are we looking for the touch, we're looking for a close in the direction of the trend. We define the trend as being bearish. Why? Because the MA1 is red. So then we are looking for, yes, a red candle. Okay, again, now we're starting to put the kind of the color coordination together. Okay, red MA1, we're looking for a down close or a red candle. That is step number 2. Okay, now what you're going to hear me say in the next 10 minutes is that we are going to get in the habit of drawing trend lines. Okay, as soon as you get this cross, whether it's a bullish or bearish cross, okay, you're getting the next thing you're going to do is you're going to activate the trend line. Okay, because as the market is gravitating toward that green line, we are going to draw a trend line in the process. Okay, We're going to get in the habit of doing that. And I'm going to hammer that down pretty hard, because you're going to run into situations where the market has so much momentum, in this case to the downside, it may not even get to the BBC. All right, see, like right here, the market couldn't get to the BBC. It had so much bearish momentum. And notice what happened, okay? It went down, okay? So what you want to do is you want to get in the habit of drawing trend lines, because, you know, if that doesn't happen and step 3 comes into play, we're going to take action, and at least you'll be in a position to take action. All right? So step number 2 is the attempt to go to the BBC, a touch of the BBC and a close in the direction of the trend. Okay? And in the process, we're drawing a trend line. That's the game plan in step number 2. Okay? All right. Now we're going to work on the oscillator portion of the chart. All right? And this is referred to as a slingshot. And the trade really exists down here in the slingshot. Okay? So here we go, some more buzzwords. The red and blue line here is referred to as the cycle. Okay? The green line, well, is just the green line. There's nothing fancy about it. It's just the green line. But together make up step number 3. Okay? Which is this. We're looking for separation or divergence. Okay? Divergence was the word thrown around in the training room. Now it's referred to as divergent or separation. All right. So let me break this down so it kind of makes sense. Okay. Step 1, bearish cross, right? Step 2, the normal thing for the market to do, pull back to the BBC. We're looking for that. And we're looking for the down close. We get step number 2. Our eyes now gravitate toward the slingshot because we're looking for that separation. And what the slingshot is telling us is this. A red cycle, okay, is good for the home team if we're looking to get short. Remember, we're looking for everything to be the same color, right? A red cycle is what we want to see. Okay, this is telling us we are in a downtrend. The momentum is to the downside on the 4-tick range in the NASDAQ. That's what this is referring to. Okay, the green line pulling away from the cycle is the separation. Okay, the green line pulling away from the cycle here is the separation. It's like a slingshot. Okay, that's why they labeled it the slingshot. Okay, it's pulling away. So what it's saying is this price action up here, the normal thing, together with the separation here, or divergence, together, okay, is step number 3. Okay, this is implying that, look, this is just an air pocket in this ongoing downtrend. That's what it's suggesting. Okay, so with step number 1 in place and step number 2 in place, in addition to step number 3, the separation, it's game on. Okay, we go inside the DOM. Okay, and again, the DOM is this guy here. We'll go inside the DOM and we'll left click. We'll left click in the red, because left clicking in the red is getting short and we make money as the market goes down. If we get a bullish cross and the market pulls back to the BBC and we get an up close and we have bullish divergence, guess what? We're left clicking in the green. And we'll make money if the market goes up in our direction. All right? So that's what we're doing. Okay? Now, this is why the trade exists down in the slingshot. Okay? This is telling us down. Momentum's down. Okay? And this action up here, combined with this pull away, is saying, hey, sell that air pocket. Okay? Because what we expect to happen in the slingshot, the normal thing, is for this green line to ultimately get down and touch the cycle. This is what we expect to happen. All right. And in the meantime, price action, the normal thing for it should, for that, what the normal thing for that to do is to make a new pivot low. When the green line gets into the cycle, it's the point at which we exit the trade. Okay, this is where we get out. Okay, why? Because what we expect to happen is this. Green line pulls away, closes the gap. Pulls away, gets into the cycle. Pulls away, get into the cycle. Until, guess what? The cycle turns blue. So what is this telling us? The momentum's up. Okay? And so then we're looking for the green line to get underneath and create bullish divergence. Okay? Over and over and over again. All right? So what we end up doing is selling this rally, selling this rally, selling this rally, buying this dip, and buying this dip as long as what? The biggest thing we'll talk about today, as long as what? The market is trending. We're making lower lows in a down market, or we're making higher highs in an up market. Okay? We won't push a single button unless markets are trending. Okay? So that's the trade. That's why the trade exists down in the slingshot. Okay? Because the cycle is giving us the momentum, the direction, whether it's down or up, and the pull away in the green line, okay, combined with the action up here, as long as we're trending, it's all there, okay? That's what we're going to be looking for in the next 45 minutes. And by the way, every trade has an 8-tick stop attached to it. So what does that mean? Well, if I'm brand new, that means if I'm trading the crude and the gold and I'm just dead wrong, I'm risking $80 a contract. If I'm trading the ES or the beans, it's closer to 100. Trading the YM, which is the mini Dow, that's closer to $40. Okay. Every trade has a stop loss attached to it. So, in the end, I'm brand new. This is my first day. What is this all about? Here's what you're learning. What you're not learning is to pick the top and pick the bottom and trade it from point A to point Z. That's what you're not learning to do. What you're learning to do is take a piece out of the middle. Okay? And then along the way, you're going to trail the stop, trail the stop, trail the stop, trail and stop until what? That green line gets into the cycle and it's time to take profit. Okay? So, what are you signing up for? Well, you're going to have to be in front of the market. You have to be in front of the screens. You'll have to be engaged in what's going on. You're going to have to have some discipline, right? Because you're going to have to follow some rules. That's what you're signing up for. And you're going to be scalping. Okay, you're going to be in and out of the markets. Okay, do you want to be a scalper? And then if that's the case, then you know what? You're really going to have to be really good with the execution part of it, right? So you'll have to know your way around the DOM, okay, which is this here, the tower, and a chart. Okay, you're going to have to learn to navigate. And that's what the demo was for. We're going to give you the demo. We're going to allow you to practice for at least 4 weeks. That's what the exchange allows us to do without having us, without allowing, it's just the rules. So we'll just keep it at that. They give you 4 weeks. They say, hey, you can have our data for 4 weeks. We're going to tease you with it. But after 4 weeks, you have to open up a trading account. And you're going to have to pay us for the data. That's their catch. Okay? All right. That's the trade setup. Okay, so let's, any questions so far? Okay. Again, this is live, and I'm inside of a demo here. So let me shake out the live account here. Okay, I'm in demo mode. Okay, you can see demo up here. I can do that so I don't screw around and goof something up. All right, so let's No questions. Let's move forward. Okay. So here we go. First market is the ES. Okay. First thing that we're looking for, and if you have a sheet of paper, the number one thing on that sheet of paper should be, number one, market must be trending, must be making higher highs or lower lows, period. What I want you to do is to get in the habit of pushing this zoom out button right here. 1, 2, 3. Okay. I want you to see more of what's going on. Okay. I'm not asking you to go to a 5-minute or a 30-minute or a 15-minute chart. Just a few clicks. Let's see if we're making lower lows. Okay. We are. We're making some lower lows here, right? Okay. The only danger with this at the moment, what concerns me, we had a pretty good bounce off this level, right? So right now, what we might be doing is we might be finding support here. So for the moment, okay, notice how the market did the normal thing. What's the normal thing for the market to do? To gravitate toward the green line or the BBC, right? It just did it here, right? All right, it just did it. Okay, my concern is we have a little bit of support back here. All right, so right now I would table any shorts for now. Okay, even though it's coming down. For me, and I think something that you should take from this, it should be easy and obvious. You should be able to look at the chart and go, man, that is a short. It fills all the buckets. Okay, there's no questions. All right, and if there's any questions about it, then stay out of it. Okay, for the moment. Okay, I like the stair-stepping action down, but we are running into a little support here. So take your mouse off the down for the time being. Let's go to crude oil. Again, notice the first thing I do is zoom out. Okay, notice the first thing that pops up to me, prior low here, prior high here, and we're pretty much congested right in the middle, right? So for the time being, the crude oil is sideways. Okay, and sometimes, one of the hardest things for people to do is to identify whether a market's trending or not. Okay, what I do see is if someone's spinning their wheels or losing money, it's because they got caught in a sideways market. They got caught in the chop and they're just getting stopped out, or a lot of break evens, one of the two. Okay, that's usually indicative of a market that's sideways. Okay, I think if you get in the habit of zooming out, you'll see a little bit more. Okay, that'll take care of that. All right. The other thing too is if you're unsure, keep an eye on dynamic support and resistance. You notice how they're side by side here? It's usually a telling sign that you know what, the market is sideways. Okay. See, this is the crude picture. See how sideways it is? Check this out. This is the Japanese yen. Okay. Zoom out, zoom out. Okay. Found a little bit of support here. We were chopping around here back and forth, and all of a sudden we broke the trend, right? Okay. This is a market that's trending. Okay. So that's what you're looking for. The easy and obvious trending factors. Okay. Because that's number one on your list. We don't hit any buttons unless the market's making higher highs or lower lows. All right. I'm going to pound that away. So crude is not off the table. Let's go to natural gas. Okay. Natural gas. Notice the first thing I do, zoom out. Right? We are above resistance. We finally broke out of that congestion. Crude natural gas is now trending. Okay. And we're going to be looking for buying opportunities. Okay. Why are we looking for buying opportunities? Because the MA1 crossed the green line here. The MA1 is what color? Blue. We should be looking for buying opportunities. We almost got across here to the downside. It's not surprising because we were congesting sideways, right? So what is the normal thing for the market to do after the cross? pull back to the BBC or the green line, right? It's down here. As I said earlier, one of the other things that we're going to do, and I'm going to labor on, as soon as we get that bullish cross or bearish cross, step number one, I want you to activate that trend line. It's right here. Okay? Activate it. You should get in the habit of drawing trend lines, whether they qualify or not. Michael is doing it all day in the training room. That's the habit you should be getting into also. Okay? So we're looking to get a pullback to the BBC, and in the process what we'll end up doing is drawing a trend line. Okay, so we need a few candles. We need 2 candles to connect the dots, right? So we're waiting for this next candle to form before we can draw a trend line. Okay? So natural gas, we're looking for an opportunity to get long. We're just waiting for the market to do the normal thing, which is a pullback. Come back to that one, okay? Let's go to gold. Should be in April gold. Notice I zoom out. We had a little bit of resistance here, right? Double top. Almost at a triple top. We are trading above it like natural gas. Okay? So I'd say right now, let's look for bullish opportunities in the gold if they pull back. Okay? So gold is in play to the upside. Okay? We're just waiting for the market to come back for us. Okay? All right. So let me go check on our natural gas. Okay, we really can't. Well, hold on. Okay, we're waiting for this candle to form. Okay. Remember, we're on a 4-tick range chart. All right, let's go to the euro. Okay, here's a market that's consolidating. Okay, again, if you're unsure about whether we're trending or not, the support and resistance dots will be your friend. They'll tell you. Okay. So what the euro needs to do is break out of this range before we can get excited about getting long or short. Okay. All right. Let's go over to the indices. Okay. Again, this is where we left off about a few minutes ago. What we identified was, hey, you know what? We had some prior support over here. We might see a little bit of a bounce. We better be careful. Okay, so be a little cautious of this. Okay. And look what's happening. You would get some grief. In fact, if you would have taken this trade right here, the result would have been a break even anyways, right? All right. Now, I talked about trend lines. See if we can get dirty with that a little bit. Okay. Let me try to find some examples. All right. A few things that pop up right here. I'm looking at the Aussie dollar. I just grabbed this just because I was looking for a market I could demonstrate on. Okay. Here's the scoop. Okay. This is after the fact, but I want to talk about this. Okay. After the cross, again, our game plan now is to activate the trend line. The trend line's here on DtPro. You left click on it. Okay. The reason you do that is because we never know if it's going to get back to the BBC, which is the green line, or the cycle turns color on us. Remember, this is the cycle. Okay. Red is good for the home team if we're getting short. Blue is good for the home team if we're trying to get long. Okay. We get in the habit of drawing the trend line as it's starting to gravitate toward the green line. Okay. So here we go. After the cross, we start drawing. Okay. Potential short right here. Okay. Another short here against the BBC. Okay. It did the normal thing. Here's another trend line. Okay. There's another trend line. Okay. Notice in these examples, okay, cycle is red, we have bullish separation. Okay, that lit the match. That also lit the match for step number 2. Again, another attempt at the BBC. We close under the trend line. Okay, why do we draw the trend line? Because we don't know if it'll get to the BBC. Okay, it may have so much bearish momentum it can't get there. The other reason why we do it, what if the cycle turns color on us? If you are a CFRN member, if that cycle turns blue on you, the trend line is required. So if you get in the habit of drawing the trend line in advance, and you get the close below the trend line, and you have that separation, okay, then you're in a position to take action. You're not, after the fact, fumbling a trend line and trying to get one drawn and missing out on an opportunity, because this one was a pretty good one. Okay. Okay. Market's making lower lows, right? That's good. That's the action that you're looking for. Another attempt at the BBC. We get the touch and the close. Not only that, we get a close below a up trend line that was drawn, right? All right. Is the trend line required? Yes, it is. Why? Because the cycle is blue. Okay. Here is the second disqualifier right here. Okay. Number 1 disqualifier. If the market is trading sideways or not trending, we do not push any buttons. That's disqualifier number 1. Number 2 is if the cycle turns color on us and it starts curling against you at a 45-degree angle. Remember, we like red in a shorting opportunity. Okay, this is blue and pitching up at a 45-degree angle. When faced with this, okay, everything's good up to this point until we see this. That is the second disqualifier. There is no trades to be done there. Okay, yes, the market did go down, but ultimately, what did the market do? Now it's starting to do a cycle reset. Michael, throw that word out there. Cycle reset. Okay. Okay. The market is going to do a bigger retracement. So what we might be having is a larger downtrend here, but instead of getting a shallow back and fill, then another new low, what it's doing now is actually making a larger retracement. Okay. So again, 2 disqualifiers up at this point. 1, if we're trading sideways, no action. If the cycle turns color on us, that's fine. Like this one, it's flat. But when she starts curling up, no action. Okay? Just remember that. That's the second biggest trap that people fall into. You get in the habit of drawing the trend line. Great. They do it because the cycles turn different color on them. But what they fail to look is take a second and say, oh gosh, that's curling up against me. They've already activated the trade. And what ends up happening, usually gets stopped out. Usually maybe get a break even, or along the line, what you'll do is you'll get some sideways action that'll drive you nuts and give you grief. Okay, until you just give up and get out of the trade. Okay. So I want you, again, I labored over the fact you want to get in the habit of drawing the trend line. And you know what? Here's a good point too. Once you've drawn a few of them like this, one quick way to get rid of all of them, see this dotted square down here in the bottom left? If you left click it, select all, and hit that black X, it'll get rid of all of them. All right, so let's go look at our natural gas. All right, so here we go. We can connect the dots. That's how your trend line should look. Just like that. Okay? Now, do we have bullish separation? Well, we got a blue line. That's cool. That's good for the home team. And the green line has pulled away. Okay? That is a close above the downtrend. That is a qualifier. Okay? Now, don't do anything. Okay? Because we got dynamic resistance printing, right, guys? If you are a CFRN member, we know any trades above that MA1, given this scenario here, number one is a momentum trade, right? You've heard Michael throw that word around, momentum trade. But it's also a momentum trade going in red dynamic resistance. Okay? So we don't want to do anything there either. Okay? But just to break it down, this is how your trend line should look. Okay? Off the wicks. All right? And that close is above it. Okay? Is this enough separation? One will ask. Yeah, it is. That's enough separation. Okay? The bigger the separation, okay, the green line pulling away like a slingshot, right? Just like pulling a slingshot, the further you pull it back, the farther the market should go, right? If you get a shallow pullback, okay, you should expect a shallow return. A shallow return might be against an old high, okay? But keep that in mind. All right, so that's natural gas. The moment, let's not watch it. No, we'll forget about it for now, okay? All right, gold was qualifying, right? Here, let's see what's crude doing. Crude is a pretty good market for Michael. Notice how I zoom out. We're bumping our head up against resistance here, okay? There's a few things going on that's pretty cool about this. We had the bullish cross here, right? The MA1 is blue and pulling away. The cycle's blue, and it's got a pretty good slope to it, right? And you notice what's happening down here, okay? It's building some separation. The green line's underneath it, okay? And you know what? If I draw a trend line, heck, I got a trend line that can draw it too. So let's do this. Don't do anything. I just want you to follow along. Okay? I'm going to build a bracket here. Okay? All right. We're not doing anything because we're not trending. We're sideways. But I'm going to try to get into the market if it qualifies and show you how to place a trade. What I just did with the tower or the DOM is I created a bracket. Okay? I left clicked on the Tinker Toy triangle. Notice when I do that, the bottom of the DOM opens up. Select sell stop. Select buy stop. Okay. If you do this, right click over buy stop, factor in ticks. Right click over sell stop, factor in ticks, and make that an 8, like you see there. What that will do, that will automatically put a stop loss behind our entry. 8 ticks away. Well, why 8 ticks? Because that's what this thing's told us to do. Those are the rules. 8 ticks. All right. So, what is the normal thing? So we're all set up. We're ready to rock and roll if we get something that qualifies, okay? All right. What is the normal thing for the market to do after the cross? Pull back to the BBC. That's what's happening. What do we do after the cross? We engage the trend line. We get in the habit of drawing trend lines. We do this because we don't know if it'll get here. It looks like it's going to happen, but we're getting ready to get long if it qualifies. Okay? Now, to be fully transparent, we are not trending, so I don't want anyone to do anything. And the reason is we got a double top here, right? We don't have higher highs. We're sideways. But let's see if I want to just put this on here, see if we, just to show you how to do this. So if this qualifies, we're going to left click in the green. Okay? If we left click in the green, the market goes up, we make money. Okay? All right, so let's see. So stand by. All right. If the low was 58.56, then the high has to be 60. We would buy it at 61. Okay? Now, why am I saying this? In the room, you're going to hear Michael talk about the highs and the lows, correct? if you add or subtract 5, again, add or subtract 5 from then the high or low, that is the exact price you will click on to enter into the trade. Okay? So instead of left clicking, you're going to be right clicking, because we're going to be buying it on a stop. We're going to be buying it on momentum above the market. Okay? If we get a 61 print, okay, it made a new low. Cancel your order. Okay? The trend line is still intact. We've done the normal thing. Okay? We've touched the BBC. So now we're looking for is what? A green candle. Okay? So if the low is 55, then the high should be 60. That will print a new candle, right click in the green. Okay? We can do that because we've touched the green line, the BBC, and if we get up to 60, okay, we'll have a green candle. Add or subtract 5 from the low or the high, and then you'll get the exact number you click on. You're right clicking if you're trying to buy it on momentum. If you're trying to sell it on weakness, you're going to be right clicking. You're going to be selling it on stop. Okay, do we have the separation? We have a blue cycle and the green line underneath. Okay, what is this trade lacking? A trend. We define that by zooming out, identifying this top here. Then why is Bert pressing the button? Because number one, I wanted to show you how to draw the trend line. Number two, show you how to build the DOM. Number three, if I can get into a trade, I can show you how to manage it, win, lose, or draw. All right. And number four, I got a chance to show you how to be proactive, what Michael is doing in the training room. Okay. Okay. So let's see. Just want this thing to qualify so we can hopefully do some money management with it. Because right now the markets are pretty slow. They're pretty lame, trading sideways. All right. So there's almost the green candle, right? So here. Just need a few more ticks here. We'll get our green candle. So now we're kind of waiting for the qualifier. Yeah, the low is 55. Okay, we need a 60 print. So you notice how I'm not getting in until it gets up to 60. Okay, we'll officially have a green candle or an up close if we get there. Okay. Come on, Crude. All right, so stand by. We're just waiting. Sometimes, look, even Michael this morning, he was standing around waiting for things to qualify. You're going to run into that. Okay, just be patient with it. Okay, if nothing's easy and obvious, then you're not going to do anything. That's just the way it is. I'm just trying to make a point here, and the point's not taking off here. I'm going to give it a few more seconds here. I'm going to leave the order on, because I'm just going to switch markets. All right, I can't wait anymore. I'm going to keep this on. Okay, I'll come back to this. I deleted the trend line, but I can come back to it. Okay, let's go back to natural gas. Okay, again, it's going to give you grief because we're running up against dynamic resistance. So put a warning flag on that one. Let's go to gold again. We talked about that breaking out a little bit above these highs. Okay, we need the market to come back a little bit. We need the market to come back to the BBC. go to the indices. If you run into a chart like this, chances are you have a trend line. Okay. We need the S&P to make a lower low. Okay, we've got a little bit of support here. Look at the cycle, it's blue. It's not in a position to take any shorts right now. Okay, we want red. Okay, we want a red cycle. This is blue. So nothing's going on there. So table that. Go back to our crude oil. Again, no surprise what's going on because we're trading sideways. But the order is in and we'll see what happens, okay? I was hoping to show you. All right, so this is the Japanese yen. The euro, again, stuck in the range. The pound. Holy smokes. All right. Definitely got the bearish cross there. Okay. So let's stay on the pound. That seems to be moving. We get another green candle here. We can draw a trend line. Okay. Are we trending? Yep. We certainly broke some lower lows, right? A lot of energy to the downside. Okay. See what happens. The British pound is set up to go short. We have the bearish cross there. We're looking for the market to do the normal thing, which is pull back to the green line, correct? What should we be doing next? Gauging the trend line, getting ready to draw a trend line. They don't have to be the same color. I prefer that, but if you took away the candles and the wicks, okay, they wouldn't have a color. So, like this, Mark, yeah, this could be a trend line. Okay, and all it does is it takes two candles. What I'm looking for is flagging. Looking for the market to gravitate toward that green line. So you'll normally have back-to-back same colors. All right, so we're just waiting for the pound to qualify. Look at our crazy crude. Look at that, stuck in a range. So we'll just take that off for now. Let's go to Mexican peso. Trading sideways. We got a lower sideways, got two lows here, a double top here. Sideways there. Canadian. All right. All right, here's what I did. This is why I did it. Don't touch a thing. Okay. Bearish cross. MA1 cross the BBC. What do we do next? Draw a trend line. That's how your trend line should be drawn. Mark, this is why you see the same color. Okay. That's a sloppy line. So here we go. Draw the trend line off the wicks. Okay. The normal thing for the market to do, pull back to BBC and have a down close. That is step number 2. Do we have separation? We have a red cycle. The green line is above. We have separation. Step 3 is valid. Step 2 is valid. Step number 1 is in place. The reason why I went inside the DOM and left click is because I was able to get short. Okay, that's why I did that. Okay, so we're looking for markets price to go down. The bracket was already set up. Notice I had the buy stop and the sell stop activated with an 8-tick stop attached to it. The stop is here. Okay, this is our entry. Okay, if you're not sure, it's also on the chart. It's also right here on -1. Your P&L might start moving. Those are all indications that, you know what, I'm in the marketplace. Okay, now Why did I tell you to hold off? Zoom out. We're not trending. We're sideways. We had a little bit of support here. Okay. What'll happen is, okay, so the market is giving us grief, I think, for that reason. Okay. That's why I told you to hold off. Here's what happens sometimes. When your chart is up like this, and it'll be like this sometimes because you're looking at Mike's stuff, right? And the chart's blown up pretty big. So what you do is you're really looking at the market under a microscope, right? So that's why I want you to get in the habit of zooming out, because, if you just take a few left clicks, you might find, you know what, there was some support over here. It's not so easy and obvious now, right? So I want to labor over that. Zoom out to see if we're trending. The other thing is, the reason why I did this, because I really wanted to show you how to enter a trade. Okay. Now let me show you how to move the stop. I told you this is part of our bracket. So what this is our stop loss. It automatically puts it in for us. Okay. We don't have to push any additional buttons. Okay. Now the money management rules. Okay. We're in a trade. We're waiting for the market to go down. Okay. If the market goes plus 4 ticks in our favor, okay, 1, 2, 3, 4, okay, we are going to move the stop to break even. Break even is our entry. Our entry is there. Okay? So watch, I'll show you how to do that. All you do is take your mouse and just put it right over the number 1, because that's our stop. Left click over it, hold the mouse, drag it, release. Drag it, release. You can move it up or down, drag it, release. Okay, that's all you have to do to move the stop from this point on. You'll see Michael do the same thing. Okay, drag and release, drag and release, drag and release. Okay, that's all you have to do. So correct. So Mark, what this means is this. We got short here. Okay, if the market gets up here, this is where our stop loss is. It will take us out of the trade and we lose $80. Why $80? Because, well, the Canadian, it trades in half a tick, so we'll lose $40. Is it a surprise this is going against us? It shouldn't be. Why? Because we're not trending. Again, you will fall into this trap. Okay? This is the first trap people fall into. They get excited about this for good reason. That's a gravestone doji. That's a bearish candle. Okay? But we're not trending. Okay? So you really gotta activate that zoom out button. Okay. All right. Let's just get rid of this darn thing. Worry about something else. So cancel the trend line. If you want to get out of a trade, exit at market and cancel. One way to get out of it and cancel all of your orders. Okay. Go back to our crazy crude. Okay, so that was the up close, right? Okay. How about we just do this? All right. Don't do anything again. Okay. Why? Here's the bullish cross. It's a bullish cross because the MA1 is blue and cross the BBC. What's the normal thing for the market to do? Pull back to the BBC. It does it here. We are looking for an up close. That green candle is an up close. We have a blue cycle. We have the green line underneath. We have separation. Okay. Is the trend line required? It isn't. It's not required, but we drew it anyways. Why? Because this is blue. Okay, it's in the direction of the trend. Okay, so what I did is I went in, I bought one at the market, And guess what? We had a stop attached to it, right? Our bracket was set. Our stop loss is right here. Why did I put the warning flag out? Again, just like the Canadian, we are not trending. Okay? Zoom out. We got a little bit of sideways action going on here. Okay? Now, I did that again is to show you how to get into the market, show you where the stop was, but from the long side. All right? And again, if I wanted to move the stop, you just left click over the number 1, drag it, release it. Drag it, release it. Okay? All right, so that's the scoop. Okay? Correct. So we didn't need the trend line because the green, okay, isn't up close. Okay? If you wanted to do that, you can actually change your candle to blue. Then you're really in sync. Okay? Blue cycle, blue candle. Okay? So you didn't need it. You had a blue cycle. Okay? Why is the market, trading sideways? Well, because we're kind of stuck in the range. That's why the market's giving us a little bit of grief. Here's the crazy thing. This could turn out to be a huge trade. Okay, one of those runners you're kind of looking for. Because if we end up breaking this resistance level here, this double top, there's really nothing till here. And look it up here. Whoa, 138 contracts up there. Okay, that's pretty big. So what that's telling you, the market has a tendency to gravitate toward a big number like that. Okay, 138 or 39, that's a pretty big order. Okay, but right now we're caught sideways here. We got a double top. Okay, so we'll just let that kind of sit. But the fact that we're trading sideways, okay, again, that shouldn't surprise you because we're trading sideways. Now you know why. When you get into a market and you're watching paint dry, that's usually the reason. All right. So I'm going to switch guns on us. Go to the S&P. So when we started this afternoon, the S&P was here. So we're really not getting a lot of volatility, right? And we warned it, hey, if we got to the BBC, we had a down close. That is not good for any kind of shorting opportunity, right? Number one, it's blue. It waters down the probability, but it had a bullish slant to it. Okay. Now, okay, beginning a red cycle, but we ideally want the green line to be above it. So the S&P needs to do a little bit more work. Okay. All right. See ya, Mark. All right. So let's see. There's nothing going on here, so hang loose. Okay, natural gas. It's kind of stuck in the mud here, so we won't monkey around with that. Going to some different markets to look to see if we can't do anything. All right. So I should have waited around for the British pound here a little bit, but okay. Let's talk about this. Bearish cross. The normal thing for the market to do, gravitate toward the green line. And look for the down close. That's the gravestone doji. Okay. We get the down close. Our eyes gravitate toward the slingshot. The green line's definitely away. We got separation, but we have a different color cycle, right? So the trend line is required. Okay. We drew the trend line in advance. That close there lights the match to the downside. That's your down close. Okay, right there. Okay. So it's not this one. Okay. It's not that one because the cycle turned color on us. So we had a close underneath the trend line. It's this one here that lit the match. Okay, here's one of the big questions I get. People are looking at the blue line, the cycle, right? And we define the disqualifier as a 45-degree angle, right? You're going to run into this, so that's why I'm highlighting this. You might say, hey, I want to get short. That's a red candle. This is not 45-degree angle. Well, that's correct. It isn't. All right? My advice to you is this, okay? When in doubt, stay out. If there's any question, don't push any buttons, okay? Some people look at that and say that's 15 degrees or 20 degrees. It's, it's flat. It's true. It is. But anytime that cycle turns color, all right, and it starts curling up against you, all right, again, you're watering down the probabilities on the trade, okay? So the question is, do you want to take that? Maybe Michael takes that. Bert's not going to take it, okay? So that's got to be part of your game plan going in, okay? So that's would be one of my suggestions. That is not a 45-degree angle. That down close there is a qualifier. We are trending, all right? So a short here at 132.95 is fair game, okay? It is fair game. All right. So that's why we're going to take it, see how it works out, okay? Again, that's not one of the easy and obvious trades I would pick, but, it might be something Michael does, okay? Actually, the result would have been probably a stop out to it at the dead high here. But, okay, let's see what happens. So that is our entry right there, and our stop loss is right here, okay? It's there because we created a bracket. We checked off the buy stop. We checked off the sell stop. We put factors and ticks. How did we do that? We right-clicked over it. So this should read 8, and that should read 8, okay? So let's see what happens. If the market goes plus 4 ticks in our favor, we're going to drag this down and move the stop to break even. Okay, that's going to be our game plan. Okay, again, not one of the best probability ones because of this, but we're going to do it just to play along. So again, I don't want you to do anything. I just want you to watch. Okay. All right. I'm going to move the stop down to our entry. This candle here closed below the MA1, correct? So the stop moves to break even. We already moved 4 ticks in our favor, right? So I'm just going to move it 1 tick ahead of our entry. So our stop is at 97. We entered at 98. Okay. What do we expect to happen in the end? The green line to get into the cycle and the market to make a new pivot low, right? We want this green line to get into the cycle. That's the normal thing for the market to do. Here's our stop loss here. See what happens. Okay, look. The green line's in the cycle. What do? Exit at market and cancel. Why? Well, the trade is the green line pulls away and gets into the cycle. What should happen next? The green line should pull away and get back into the cycle. Okay? I don't know what's going to happen there, but the green line got into the cycle. Okay? All right, again, that's the one, really the candle that lit the match. Okay, this is watering down the probabilities. It's curling up a little bit. I certainly wouldn't have been a fan of that one. But it is what it is. The ES. Okay, notice how the cycle is sloppy here. So I'm glad we just kind of stayed away from that. Our crude that we put on, that's kind of laboring right here. Shouldn't be a surprise. Why? Because we are not trending. We're sideways here. The cycle looks great. We got bullish separation. Okay, we had the up close at the BBC. It's just lacking a trend. Okay, but we put the trade on just to show you how to get in. Fact, exit at market and cancel. Easiest way to get out. Okay, that's the natural gas. I'm going to go check out the currencies one last time. The Japanese yen is sideways. The euro, we're still sideways, just starting to get a bearish cross. Why is that? The MA1 is red, crossing the BBC. Just talked about the British pound being a little bit confused right here. The Swissy is sideways. The Canadian. Side note here. When the black step line gets into the BBC, like you notice, like you see here, that's also the third, that's also a disqualifier, and that's disqualifier number 3. Okay, the black step line piercing the BBC, okay, as highlighted. So we have 3 disqualifiers. Number 1, markets in chop, trading sideways. Don't touch anything. Number 2, the cycle is a different color. This is the cycle, right? It's a different color, meaning, okay, it's not going in the direction of the trend. All right? If it's a different color and it's starting to curl up at a 45-degree angle, that's the second disqualifier. What is that suggesting? Chop, or maybe a cycle reset, or a bigger retracement. Okay? And the third one is this black step line. It can be used to help trail a stop, but also it's used as a disqualifier. Okay? It's 2 o'clock. Markets are kind of just laying here, right? So I'm going to call it quits for the afternoon. Okay? So I went over some things. We didn't have a lot of action. We certainly didn't have any trending markets. I took the opportunity to labor over the point. You got to hit the zoom out button right here. And you better get in the habit of drawing trend lines. Okay? That should be a big habit you get into. Okay? Third takeaway, my suggestion would be make it easy and obvious before you push any buttons. Okay? What else? Well, that's it for now. Okay? So, yes, is all the CFRN stuff in indicators, like line thickness, maroon lines? Yes. Yep, it's there. So if I went over here and right-clicked over this one and went to properties, okay. Okay, that gives you all the properties of the CF_CFRN. Okay. If I right-click over the Slingshot indicator and hit properties, thickness, the maroon line, okay, turning it on and off is right here. Okay, it's all there. Okay. So if you're at that point where you're downloading the indicators, downloading the platform, okay, I did a short video on how to apply them. Okay, and then if you have questions, you can always call me and I'll walk you through it. Okay, but the video is seems to be pretty easy. That's the feedback I get. All right. Every Thursday from 1 to 2 Chicago, we're going to hang out talk about the same stuff over and over and over again. Okay. Why did gold drop so much this morning? I have no idea. But what I do see, and if you have the CFRN indicator set, you should look at it this. Bearish cross, pull back to the BBC with the down close. Bearish separation. What do you think is going to happen? Normal thing for the market to do after the cross is pull back to the BBC. So the way that I look at this, applying the indicator set, because it can be applied to larger time frames. But right now, the gold is a little bit bearish under 1312. Okay? That's what I would see. And I think today's price action is suggesting that. What could happen is we can challenge the MA1 or the green support dots again. I think if we closed under 1280, which is support dots, not only do that, you only break a double bottom, right? Then I think what happens, if that's the case, then you're probably going to get all the way down to about 1250. Okay, then we possibly look to go long again. So I wouldn't be too excited about the gold right now. Okay, there was an opportunity here. I was a little long here, but guess what? We got rid of it at 1307. Why? That's where the BBC was. All right. So again, every Thursday for an hour, just kind of hang out and go over the trade setup. Slow motion. Go over the same things over and over and over again until I pound it in your head. And then hopefully you go through the same routine that I'm going through. Zooming out, drawing a trend line, going through the steps until you get to the point where you're confident and you're confident to the point where you can push a button. Okay. All right. I recorded it, put it on YouTube for review, and I won't do that until the morning because I have to decode it. So that's it. All right. I'll see you guys in the morning. So I am in the background.